Welcome to Talk Back. Today we will be discussing the state of the capital market in the Indian economy. To do this, I have with me Mr. P.N. Vijay, a leading financial analyst in India. Mr. Vijay is also a member of the economic cell of BJP. Welcome to the program.
Thank you.
Vijay, capital markets are in turmoil all over the world. And of course, in India, we have been seeing all the uthal-puthal over the last 2-3 months. Would you say what we are seeing here is just a reflection of the worldwide trends, or are there some underlying malpractices, some malfunctioning of the system here, which has resulted in what we are seeing here?
Well, I think a fair amount of both. But I would say that what we have seen today, in the last couple of months at least, from the 1st of March, is clearly Indian, local, it's born out of our local payment problems and malpractices. Let's just look at what's been happening in the last 6 months. The NASDAQ, which is increasingly becoming the benchmark for most of the global markets, has fallen from about 4,000 levels to about 2,000. So it's fallen 50%. If you compared the BSE Sensex, which is our benchmark, it hasn't fallen that much. So we have fallen worth less than the world markets. But in the last 2 months, if you see the American economy, it's been flooded by a slew of bad news. You had unemployment figures, you had corporate earnings warnings, which were terrible. I mean, all the big ones were really showing very unflattering results. On the other hand, in India, we had an excellent budget. We had a rate cut. Interest rates were cut twice by the RBI. So there was enough reason to hope that our markets will trend up. But in the last 2 months, they have really crashed, which is because of the malpractices and all the stock scam, payment problems and so forth.
When you say payment problems, would you like to identify one or two crucial problems of the system? What are the kinds of payments problems which lead to this sort of result?
Okay, there's several. Really the problem in India has been that certain operators, you call them bulls, bull operators, took the market up. Mr. Ketan Parekh is now being interrogated for that, using bank money which they got through illegal means. So during the whole...
Through illegal means?
Yes, through illegal. I mean, if a bull operator has money of his own and takes the market up, good luck to him. If he makes a lot of money, I mean, there's nothing wrong in making money.
But what I meant was it's legal to borrow money to invest in shares.
Yeah, but he also, the case of the government, of course, this is matters sub judice. So
yes.
The case of the government is there were some documents were forged and, it was all malpractices type of thing. So we are having a situation where certain operators took the market up to artificial levels.
But how could they get away with it? What was the problem with the system that they could do this and the system didn't catch them?
Well, the system obviously failed. What failed? Are the laws bad, or the people who are administering the laws inadequate? Clearly, we have good laws in this country. In the last scam, if you saw the Harshad Mehta scam, we did not have a SEBI, we did not have screen-based trading, we did not have all this transparency disclosures. Today, we are very westernized. I mean, it's almost the way we trade in our markets is similar to, say, London or Wall Street. But our regulators have not been able to see the early warning signals. I'll give you a simple example.
But you say that we have the laws, and yet, if I'm correct, I think the SEBI chairman said that they have not got enough powers, which they have been asking for. Is that...
Yeah, I read that too. I was a bit surprised, because today the SEBI has vast powers. I mean, it does not have probably powers to send somebody to jail, but it definitely, for example, there was a rigging of share prices by 3 top companies, Sterlite, Videocon and BPL, way back in 1998, and nothing happened. I mean, it was there for all to see. But suddenly, last week, those cases were just taken out, and the punishment meted out. Now people are asking, why wasn't that done right then? There has been an unofficial illegal Badla system, carry forward system in Calcutta for the last 2 years. Nothing happened. Suddenly after this Ketan Parekh imbroglio, a stop is put to that. So in my view, the system failed not because of any major deficiency in the laws of the land, which are quite good now, except that the people did not really, not putting any blame on them, but maybe did not have the expertise or the skills to recognize these early warning signals and take action.
And also to know that you have to act fast.
Yes. In the capital market, one day is too late. I mean,
Exactly,
you have to pull the plug literally.
Yeah. The other thing is, a lot of people are saying that when share prices were going up, everybody took credit for the fact that the fundamentals are good. There is feel-good factor. We all said the budget was great, which it was. But is it not true that even in such circumstances, when share prices seem to be going up at a more than expected rate, that SEBI and other regulators should be looking into whether this is a genuine increase or speculative bubble?
Absolutely. I think what happened last year, the genesis of this crisis was really last year, when share prices just went through the roof. Not in all the stocks, but in certain highly speculative stocks in the IT sector and telecom sector. At that time, the regulator, suo motu, should have made a probe. That's what the SEC in the US would do. That's what the LSE in London would do. Because you are sitting there as a surveillance guy. You say, now it transpires, it was all circular trading. Yes. The bull operators set up a set of companies and they play among themselves. And when the retail investors come in, they walk out. This is terrible. And there were enough warning signals, and I think we really didn't catch them.
Also, there has been a lot of talk about whether there should be a single regulator for banks and capital markets, or should you have different regulators for the banking system? Should you have a regulator within the Reserve Bank, or should you have an independent regulator? What is the international sort of norm on this?
Okay. Today, in India, we have 4 regulators for the markets, broadly. We have the SEBI, which is the first regulator. We have the Stock Exchange, which is an independent regulator. We have the Reserve Bank of India, which comes in wherever a banking involvement is there, wherever debt markets are there, wherever foreign investment, FIIs, are there. And then we have the Department of Company Affairs. Many sections of the market are regulated by department. And over and above that, we have the Ministry of Finance, which is sitting there like the Lord Buddha and all looking at everything. So we have 5 government entities sort of, jostling each other. In the UK, for example, there is the Financial Services Act. Probably the ideal situation, in my view, will be 2 regulators. One for the banking system and one for the capital markets. Which is what the US has. You have the Fed and the SEC.
Yes.
All others may input into the market, but through these 2 agencies. The regulatory agencies which the market players see are only a banking regulator and a capital market regulator. I think that should be useful.
Now, one other question, that given that this had happened, is it not the case that UTI, being such a large player in the market, could have stepped in to offset the manipulation by other mischievous players? Now, why did that not happen?
Well, it's a very difficult question. I really don't have an answer. It's a fact that UTI is by far the largest player. In fact, about 60% of all domestic mutual fund industry is controlled by the UTI. So it can move the market. It can take a view and stabilize the market. It hasn't done that. I mean, if it had done that, it wouldn't have. So I think it's one of the things which the JPC would be looking at. Did the UTI play the role? Because the government has given a lot of concessions to UTI.
Exactly.
Reason why has it given that? Because one of the roles it has to play is to be a stabilizing force. I mean, not to lose money or anything like that, but try to stabilize, which it hasn't done. Now, the other more serious sort of accusation that's being made against the UTI, for which, of course, I'm not aware of any facts as such, but what one reads in the media, is that there has also been some sort of a nexus between some of these companies, like your HFCL, or who have been using the UTI to dump their stocks. So, in fact, there are statements being made by various analysts that the UTI could have been, in fact, one of the reasons for this crisis becoming a bigger crisis. Now, these are all things which will come out in the stock scam, but one would have hoped that the UTI would have played a much more stabilizing role.
To what extent is this stock market problem a reflection of the fact that we really don't have effective corporate governance in our country? And because the companies are not really working to maintain share values of, their companies, of their shareholders, then, other things work on that and we have these kinds of problems. Is there some logic in this kind of argument?
Yes, I think if there is a long-term reason why Indian capital markets have been in a bear phase since 1996, I guess, it's because of corporate performance or lack of corporate performance. Honestly, to some extent, the corporates cannot be blamed fully because we have reformed, the tariff barriers are coming down, investments made on certain parameters have changed. On the other hand, let me give you a simple example. If the BSE Sensex of 1990, which was fully, full of Indian corporates, was today, it would be below that level of 1990. So in the last 11 years, wealth of investors has been taken away by Indian corporates. It's a fact. One can go into detail whether that's because of changes in the economy like opening up, tariff barriers, competition coming in, or it's because of a lack of transparency, lack of professionalism, lack of ability to change with the times. But the Indian corporates have been in a negative influence on the Indian stock markets, unfortunately.
Or is this because we expect much more from them now? And therefore, while they may have improved their performance, but because expectations are much higher and standards that they are subjected to are much higher, that perception affects the share prices?
Very true. I think that's a very good point. The perception of the Indian investor has also changed. He is becoming very unforgiving. His eyes have been opened to modern methods of analysis. And transparency, one good thing we have done in our capital markets is there is tremendous flow of information, quarterly balance sheets, much better prospectuses and so on. So a lot of, I'd say, muck which is lying one level below in Indian corporate balance sheets are just getting out. And investors are now voting with their feet. They are not giving the type of PE multipliers that they used to give before. Because they have a choice now. They have the multinationals, they have the IT companies, which are the professionally managed companies. So the investor requirement from the Indian corporates has gone up, and these guys have not come up to that expectation.
Talking on that subject, have the foreign institutional investors, the FIIs, been a destabilizing force in the Indian capital market? There is a lot of this perception. On the one hand, we talk about the small investors and how they may have suffered and how they want better governance and all that. But then there are also these allegations that FIIs are really a destabilizing force in the Indian capital market. What would be your comment on that?
Oh, that's a tough one. Because that's in a way a flavor of the month as it were, this type of question. Let's get some facts right. The FIIs came in about 9 years ago. In these 9 years, they've invested $11 billion into India, not a small amount. Except for 1998, they have been buying more shares than selling. In the last 8 years, they have been bullish on the market. So obviously, if they have been voting for stability in a way. Secondly, the way the mechanics of the market works, there are speculative trades in the market, which is carry forward, where you don't actually take delivery of shares, and there is delivery-based trading. The way the Indian regulations operate, a foreign institutional investor cannot do carry forward trading. He cannot short sell. He has to buy, he has to take delivery and pay for every stock within 48 hours. So some of the destabilizing instruments
are not available
to him. So in a very bland way, one could say that if the FIIs have been investing more and more, if they cannot do speculative action, how can you call them destabilizing? And in fact, in the first 4 months of this year, they have invested close to 8,000 crores in our markets. If you think of the Indian market as having basically 3 types of players, the FIIs, the Indian mutual funds, and the Indian retail investor, the FII has been buying, and these two guys have been selling. So, but there is a deeper issue which is sort of surfacing, whether they have been behaving as conduits for non-FII money. I don't know where that will go, but that type of issue has been cropping up.
So this is the new foreign hand hypothesis, right?
Yeah.
You basically have money from India going out and then finding its way in after being laundered through the FIIs. But would their legal system permit this kind of thing? After all, these FIIs must also be functioning within a certain legal framework in the country in which they are registered. So there are a lot of questions here which need some sort of, answer and some reflection.
Yeah. In fact, this is a very burning issue in world capital markets. The Americans and the EU are very scared of this because most of capital inflows are coming through what so-called tax havens. I mean, you probably know that Mauritius is the #1 investor in India.
Yes.
And there is Gibraltar, there are the Channel Islands, there is Guernsey, there is Bermuda, there is Bahamas, there are about 12 or 13 tax havens. So these have no laws. You don't have to talk about the parentage of the funds. So technically, if the FIIs are making investments of somebody else's money out of these tax havens, there is no system available to detect that. Now, what EU and America and the US have done is, by 2004, these have to be stopped.
They will be, what do you mean by these have to be stopped?
That is, the tax havens will have to openly disclose the manner in which the funds are coming in. So this is happening as part of transparency. But today, it is technically possible for an FII to get money through his name and invest it in India, even though that money by itself, if it had come into a market, would not have been allowed by the authorities. So there is an issue here.
I think also there is this tendency that whenever something goes wrong, you blame a foreigner. And very often we've had very responsible people talking about FIIs being fair weather friends, or for that matter, all portfolio investment, and particularly short-term capital flows. There is this feeling that, when you open your economy to short-term capital flows, these fellows come in, but at the sign of the first danger signal, they'll take all this money out, and they will destabilize your economy, especially if you don't have a strong financial sector. So that brings me to this question of capital account convertibility, because what I want to ask you is, should we wait till we have a domestic financial system which is strong enough to take the shocks, to really open our capital market to all kinds of capital flows freely coming in and out? Or do you think that if we open our economy and if we integrate, we allow more capital to come in, that will force us to reform our financial sector faster?
Oh, yeah, there are two ways of looking at it, half full, half empty. Till 2 years ago, I would have answered, I'm such a free market guy, I would have said, let's bring capital account convertibility. If there are a few shocks, let's take it. But the way one is looking at the Indian financial system, look at the banking system. The level of NPAs is just too high. The whole thing is ridden with bad debt. Look at our capital market system. We just now saw that whether the regulations were adequate or the players were not fast enough, we have a major problem in our capital markets. In this scenario, one may not like to upset the apple cart by bringing in another dimension, which is making the rupee convertible more so that flows can go out. So there's a fear that suddenly the whole money may exit. So I think unless some of these small fires are fought, we shouldn't take on this one.
Coming back to this whole question of regulation so that we can have a better functioning capital market, as we look ahead, what would be your two principal suggestions on effective regulation so that we don't have the kinds of capital market failures or breakdowns that we have seen in the last 1 month?
Yeah, I think several things need to be done, but in terms of priorities, first is we need to increase the level of skill and expertise of some of these regulators. I'm told in the SEC in the US, any middle or senior position in the SEC, you need to have at least 10 years online experience in the capital markets. Otherwise, you can't do that job because it's a very technical job. It's a bit like your Atomic Energy Commission or something. Unless you know a plutonium from a uranium, you can't be the chairman of the... So I think we need to increase the quality of our regulation.
So you need professionals at SEBI and not administrators.
Yes, clearly. The people there are excellent. They're very competent people. But how will you recognize a circular trading through volumes on your screen? It's a highly technical question. The second thing we need to do, we need to separate the big fish from the small fish. As I look at the system, I feel that a lot of delay is happening in our financial supervision because a small crime is engaging a lot of time of the regulator. He has about a few million investor complaints coming in. Some of them are potential time bombs. But in his space, mind space, he's not able to separate out. What they do in the US and UK is they clearly separate out certain crimes or misdemeanors, if you want to call them, are attended at a very, even franchised out by the regulators. So you concentrate on a Bansali, on a Harshad Mehta, on a Ketan Parekh, which would amount to about 95% of the fraud. Then you can quickly decide. I think these guys are their hands are too full of small things. So we need to change the system there also.
You know, look at this case of Nick Leeson in Hong Kong, this rogue trader. Was it not the case that within 3 months he was put in jail, and then he was even out within a year or whatever it was, and he was made such an example. This is the Bearing Security scam, where others could sort of really not dare do what he tried. Now, when we had the Harshad Mehta case, we thought that never again will we see that in India, and now we have a Ketan Parekh. So I think justice delayed doesn't have the same impact on others, and so you do think that we should have. Now, but would SEBI by itself be able to do this, or what sort of institutional mechanism would you have to see that the guilt is established fast and punishment is meted out again very, very fast?
Yes, quick retribution has been typical of all capital markets. It's good that you mentioned Bearings, where 2 nations were involved. The crime was in Singapore, but committed by a UK company, so 2 courts had to step in, and even in the US, the Drexel Burnham, the chief, was put behind bars in 6 months. I think what we need to do here is that people like SEBI can act very fast. I think that's not an issue. If we get the right people, if we set up the systems, enough systems, within a few days of a capital market infringement being committed, it can be detected and it can be proven. So that's one stage. That's till we say, till we filing the FIR. But after that, what? You know, then we get into a bigger problem of judicial reform. Because for the judicial system, this is one more case. Yes. There are a few million waiting out there. So maybe we need some economic courts or something, you know, I'm not an expert on that, whereby after the detection of the crime, you need a system whereby, this is very important in capital markets, because you need the retail investor to come back.
Yes.
If he feels the system, there are always roles. I mean, you know, they say in a bull market there are about half a dozen scams, and in a bear market there are exactly 6. You know, so there will always be scams in our capital markets. But if the system is seen to be fast and efficient and fair and transparent, the retail investor will remain there.
So this is like saying that, you know, if you have road accidents, it doesn't mean that you stop driving. Yes. So if you have scams, it doesn't mean that you stop engaging in capital market transactions.
I hope so.
You just need to have better traffic systems and better highways and what have you. And you think with that, we can. But how far are we from getting to that stage?
Well, you know, we're probably at 6 or 7 on 10, you know. One nice thing which I'll tell you about this whole scam, different from Harshad Mehta scam. Not a single rupee has been lost by an investor. Nowhere has an investor was owed money of 1 rupee and was not paid. It's a different matter that he bought HFCL at 3,000, which is now 100, he has lost. That's a business risk he has taken. But when he's supposed to get 100, this is very different from the Harshad Mehta scam, where investors did not get back their money. So that way...
But the 3,000 was brought to 100 by somebody else.
No, you wanted something positive about our market. So I'm saying that today we have screen-based trading, you know, many things we have done. But where we have really slipped in actual market regulation, surveillance, supervision, you know, where we really need to tone up on that. Then we can have a great capital market.
And what about this latest decision on banning Badla? Would you explain to a common person what that means in the short term and in the long term?
Well, in the short term, it's going to be very tough, because in India, out of 100% of trading, 90% is Badla or carry forward. Only 10% of the transactions, I mentioned to you about the FIIs and institutions who can't do carry forward. So most of the liquidity in the Indian market is of retail investors who have no intention of taking delivery of a stock or giving a stock. So right away, 90% of the volume will dry up. Already Bombay and BSE, NSE volumes of about 13,000 crores per day is now down to 1,800 to 2,000 since short sale was banned on the 8th of March. So we're already seeing a drying up of liquidity. Going forward, if we have to globalize our markets, this Badla is a totally homespun product. It's got too many defects about it. It breeds volatility. I mean, it sort of, we need to go to options and futures. We need to have a cash market, and we need to have a totally different options and futures market. But we need to get it in very fast. Otherwise, the message will go through. Whatever liquidity was there in the system, it's gone, which is why in the newspaper there's so much of negative comments. But eventually, we need to move towards two types of markets. Those who play in cash alone, and those who play in forwards alone. And never the twain shall meet.
How easy it is to get to the options and futures markets?
Oh, we are very well organized. Technology-wise, we are already having index futures. So today you can go and buy a future of the NSE, of the Nifty, or the Sensex. So the technology is in place, the screens are in place, but we need to see that we don't do something which is disastrous to the system. So probably we need to run both of them together for a year or so. You know, make both the horses run, then quietly remove this. Otherwise, in this charged environment of accusations and counter-accusations, if this also comes in, you know, there'll be a real problem.
Vijay, that's really been very, very instructive. The message that I get is one of the need for systemic reform, effective regulation, and then really forging ahead, because the fundamentals are really all there, both in terms of economic growth potential and in terms of the capital market base that we have. Thank you very much. We'll be back same time, same day next week. Until then, goodbye.